Good morning and welcome to the Financial Fortune Teller podcast. This morning we have Lizzie Mannering, one of our protection specialists in the office, and we're talking about your background. Good morning, by the way. We're talking about the importance of wills and also how we kind of protect local individuals, families, business owners, and what we can do to give them that financial resilience.
Yeah.
So welcome.
Morning.
Now, I want to start by saying, I'm not sure why it looks like we're in a jungle today. It's a little bit of a funny background, but we'll run with it. But, the podcast backgrounds will keep changing. We want to freshen it up each podcast. So today we're over at the sales office, which is on Bucklesbury in Hitchin, and you've come over this morning. And so let's get to it. But listen, we also have got Pen Watch. So this week we've got the Vitality Pen. So Vitality is one of our providers for the likes of serious illness cover, health cover, private medical insurance. So we're hoping we can get Vitality on the podcast. So if you're watching this, or our business development managers watching this, which I'm sure you are, I won't name your name, we'd love to get you on. So yeah, Vitality's Pen Watch this week. So Vitality, let's put them aside. We'll come on to Lizzie. And do you want to tell us a little bit about you, what you do with Fortune Financial, and your background?
Yeah, so my background, gosh, I've worked in insurance over 22 years now. And when I met you, I had literally just had my first child, my little girl, and I was a mortgage advisor and trying to find a self-employed role.
Was that a good moment when you met me?
Yeah.
Is that what you're saying? Because you said that with hesitation there.
Well, I found your post on Facebook, didn't I? And we met and had a chat, and it all sounded like it was going to work. So I made the decision to kind of leap into the self-employed world, which was a bit scary, having just had a baby. But
good on you.
Had a go, and fast forward, gosh, how many years have I been in now? 3?
I'd say 2.5, 3 years.
Yeah. Coming up 3 years, and loving it. Absolutely brilliant. For me, it's given me that balance between being able to be a mum and work. I had another little boy last year.
Amazing.
And so what do I do with Fortune Financial? I do will writing for families and anybody locally. We also do a lot of protection. So a lot of the life insurance products to protect particularly families when they've got young children or any age children, just to give the financial security.
Yeah.
Income protection, which is one of the more important products because it protects your income if you're unable to work. So that can be gold dust, keeping your house and paying your bills if you're not working. Critical illness, so covering you if you get like a cancer or a heart attack style issue, to name a few, and also now venturing out into the business protection world as well. So
which we love, by the way.
Yeah.
It's a huge space. It's a topic that business owners, limited company directors, if I'm honest with you, are not familiar with. And for us to be able to go out there in the real world and educate business owners on these products, I think it's going to be a real journey. You just talked about the last 2.5, 3 years for you in the personal protection space. I feel it's going to be a great addition for you, but also for the business owners around Hitchin, around Hertfordshire, Bedfordshire, Cambridgeshire, that you can support in making sure their businesses are secure.
Yeah. Because if you don't protect you as your business, then obviously you lose your business if anything goes wrong. So if you're not able to work, particularly if you are the most important person in your business, then you lose your business as a result.
And I'd go as far to say is that people have these concerns, business owners have these concerns about maybe key individuals within their business, also about the entity itself, how it would survive without them running it. Because 9 out of 10 business owners are the main key person within the company.
Yeah.
So they'll have the concerns, but they don't know where to go to cater for these needs. So having someone like yourself who is an expert in the area is going to be absolutely key. So I'm looking forward to seeing that in full flow throughout 2025.
Yeah, definitely. I think particularly for business owners, it's so important to pay for the protection through your business. Why, if you're paying for it out of your own pocket?
Yeah.
It's crazy.
Well, we're going to come on to that, so hold that thought. I'm going to rewind now. You just talked about the last 3 years in the personal protection space. We talked about life cover, critical illness cover, income protection. What's your go-to product? If you had to put one at the top of the pile, what would that be for you?
I think income protection.
Okay.
I think life insurance is important, but I think income protection, if you don't have that and you're not working, how are you paying your bills?
Absolutely, yeah.
You've still got a mortgage, you've still got all your utilities, if you've got kids, you've still got to put clothes on the back, food on the table, it's crazy to do that without income.
Yeah.
Most people couldn't do that for more than a couple of months.
And I suppose we all go to work for a reason, don't we? There's not many that have got the luxury that they go to work just because they enjoy going to work and the money doesn't matter.
Yeah.
So that speaks volumes, is that you're going to work to earn money, to bring money in month to month. And in the event, well, you tell me, what events is income protection going to give you the security for then?
So it can be anything as I say as simple as more like a broken leg, or it can be something far more severe like a cancer, or anything in between. So it's more of a sickness policy rather than just purely critical illness or anything more serious like a life insurance. But it just gives you that security. You can claim on it as many times as you need to. So if in 1 year you break your leg and
Yeah.
end up with some time of work with depression and end up unfortunate enough to get a more severe issue like a cancer, you can claim on it multiple times.
Yeah.
And
So,
it's there for you for that. And particularly if you have it long term, it's there up until the retirement.
so what you're saying there is income protection will cover you for accidents,
Yeah.
sickness,
Yep.
what about disabilities?
Yeah, depending on if those are as a result of an injury, let's say. So if somebody had a car accident and then ended up disabled
Sure.
as a result, and particularly if they were never able to work again,
Yeah.
if they were, let's say, a tradesman, and ended
Yeah.
up in that situation, were never able to do their job again,
Yeah.
then the income protection would pay that amount of money every single month up to their state retirement age.
Well, it's a no-brainer, isn't it?
Yeah.
If it guarantees you your income, I suppose how I would look at it is that without it, you're going to be gambling every month that you can go to work.
Absolutely. And people think it won't happen to them, and it might not, but
Yeah.
statistics show it does.
Yeah, for sure.
So,
No, well, if we come back to the time you've been advising with Fortune Financial, you've arranged income protection for not even tens, probably hundreds of clients in the local area. And for you, I presume I'm putting words in your mouth, but does it give you an element of satisfaction to know that you've give them that peace of mind?
Absolutely. Yeah, it's something nobody ever wants to pay for insurance, do they? But at the end of the day, if you have it and you then end up off work, it is amazing. And I've seen clients use it
Yeah.
and know that they've got that security in place. So, it's almost like the best money you can spend.
Absolutely. Yeah.
Because unfortunately, the income protection is the one that most people are likely to need over their lifetime.
And you're talking there about money to spend. Of course, you need to contribute a premium every month towards securing the cover. There is an advantage to securing it early. Do you want to just elaborate on that for me?
Absolutely, yeah. If you get it when you're younger, then the premiums are going to be more cost effective because statistically you're more likely to be healthy and less likely to have some of the longer term issues. So therefore, premiums are always going to be better. Obviously, the later you leave it in life, it is going to cost more money. Doesn't mean it's not an option still, because there's always ways with the income protection of giving shorter term cover, whatever meets the budget. Then it's about getting client the best possible cover they can afford.
So what you're saying there is you can tailor a recommendation to an individual's circumstances.
Absolutely.
So the young, fit, healthy, you might get the bells and whistles of a policy, which could be extremely cost effective. Alternatively, if you've got someone who maybe is in the late 40s, the 50s, even edging into the 60s, and they still want to protect their income, if they've had medical complications to, we wouldn't say a severe nature, because that could be a huge impact, but if they've had complications, like you mentioned, they've been off for accidents and injuries, if they've had diagnosis of certain conditions, we can still get them covered. And there potentially is alternative style plans that bring the cost down, because for a lot of people, it is about affordability.
Absolutely. For me, whenever I sit down with a family or a client, I think I'm always trying to tailor that cover to them, because there is no one size fits all.
Yeah.
Everybody's situation is always going to be slightly different. If you've got kids, then your financial responsibilities are different. If it's you on your own, then your responsibilities again are different. So I will always sit down and tailor whatever the requirements are specifically for that client.
Brilliant.
And make sure off the back of that any life insurance style critical illness policies are written into trust to make sure that those are 100% protected.
Well, I'll hold that thought as well, because there's 2 points that we're going to come on to there, and I definitely want to touch on that with you, because that's something you're big on and something you do very well. Just to finalise on income protection, I'd love to get you back on the podcast to go into a more of an in-depth discussion around income protection, and especially for business owners as well, how they can protect their income. But just finally on income protection, what if I have a high risk occupation? It's something that is, you'd have thought, am I insurable? You said that wrong there. Am I insurable? Is that something you can help, say, a window cleaner with, or a HGV driver with, something like that?
Absolutely, yeah. And I've actually done a roofer.
Okay.
Income protection. So yeah, absolutely, it's an option. Obviously, the more risky your trade, there are going to be potentially slightly higher premiums as a result. But at the end of the day, you're more at risk of injuring yourself. So it's that balance between
Yeah.
you're more likely to need it
Yeah.
over the cost itself. But yeah, it's absolutely an option. We have a large panel of providers that we use, so there's always I don't think there's very few cases that I've not been able to solve.
Yeah. Yeah.
There's always a way
Yeah.
usually to fit something for somebody.
Yeah. And like you say, with income protection, you're going to tailor that client to the right provider. And we've talked a lot about cost. Sometimes you've got to look at it from a different angle, haven't you? You've got to look at it as an individual. Can I afford not to have it?
Yeah.
Because that's really important. And if for example, you have to take 10, 20 pounds out of your weekly wage to make sure you've always got your wage, in the grand scheme of things, when you need it, you've mentioned it's absolute gold dust for you, isn't it?
Yeah. And I bet you a lot of people would spend that easily on a takeaway every week.
Oh yeah, for sure. I know I will.
If you can, yeah.
If not 2 or 3 times. Yeah.
So I suppose when you look at it that way, the cost of
Yeah.
a takeaway a week can give you really good long-term financial security.
Absolutely, yeah.
It's almost like a no-brainer.
So you touched on critical illness cover as well. Can you just summarize on critical illness cover how that differs to income protection? Because what I tend to find with clients is that they have critical illness plans, but people don't tend to have income protection quite as much.
Likewise.
What's your preferable products, and can you just touch on how the two differ for us then?
Absolutely. Preferable product. I probably am leaning these days a lot more towards income protection, just because I feel like that's the one that's going to keep your roof over your head and keep the bills paid.
Yeah.
The difference between the two is the income protection is literally replacing your income monthly. So every single month where you're claiming, you're going to get a lump sum of money from the provider, essentially replacing your salary monthly to enable you to then use that money to pay the bills and continue to live.
Yeah.
The critical illness is going to cover you for more severe conditions, so it's not going to be covering the broken legs.
Okay.
So it has to be something a lot more severe for it to better claim on the policy.
Okay.
So you're looking at more like your heart attacks, your strokes, your cancers,
yes,
type things, and it's giving you a lump sum of money rather than a monthly income.
Okay.
For me, that is I suppose the way I describe it is it's the cherry on the top.
Okay.
So having the income protection allows you to pay the bills. If you're in a position to having critical illness on top of that, that's going to then allow you to have more financial freedom.
Yes.
So, for example, if you weren't working and you were claiming on income protection and you had cancer, your wife wouldn't better claim under any policy if she wanted to take time off work to help you attend hospital appointments or look after the kids.
Yeah.
And it's not as simple as it's just affecting you.
Yeah.
It's affecting your whole family. And so that critical illness cover money then allows your wife to take time off work.
Yes.
Not worry about the fact that they're dropping income because you've got the money here to allocate to pick up that loss over a period of time, because an average cancer can take 18 months to recover from.
Wow.
It's a long period of time.
That's likely a best case scenario, isn't it?
Yeah. And that's a long period of time for expecting, you as a family to be able to cope.
Question for you there then. So you mentioned with critical illness cover, you have to say meet a condition of the provider and a certain say criteria level for it to pay out. If income protection pays out for pretty much any reason of health and accident and sickness and injury, does that mean critical illness cover is cheaper for clients to take than income protection? Because there's a chance it's not going to pay out because you've not met that severity. So like you say, if you break your leg, you're not getting anything.
Yeah, there is a chance for that. Do I find it cheaper? It's probably, no, I wouldn't necessarily find it is. I generally find it's possibly about the same for most clients. It can be more expensive depending.
Yeah.
I suppose the benefit of the critical illness, particularly if you're a family, is you can include your children.
Okay,
and as a parent,
absolutely.
For me, it's something I never want to think about. But unfortunately, our kids are not exempt from getting cancers, and they can still fall,
absolutely
seriously ill. And if they are ill, all you want to be is mum and dad. You don't want to have to think about working. So that money can then allow you to just take your foot off work and be a parent. So if you're protecting a family under critical illness, it can be a little bit more expensive, but it's giving you that security as a parent to know that your kids are protected as well up to after the age of 23, which is actually quite an old age. When you think about it in the long scheme of things, it's really good.
But your kids are always your kids, aren't they?
Oh, they are, absolutely. But it's just giving you, it's longer than just 18. If they're at university, you can continue to cover them. Yeah. And know that you've got that security in place. So.
I love that. That's so important. And I think what we've established here is that income protection, I agree, it kind of sits priority. Having your income there every month is such the foundations of everything you do. So whether that's paying your mortgage, paying your rent, meeting your commitments, and also people forget they need to continue to live.
Yeah.
You might still want to go to the cinema, you might still want to go to the gym, you might still want to be able to go out and enjoy yourself, because there's no reason to be bedbound or be at home because you've been diagnosed with a condition. If anything, you might want to live a little bit more.
Well, particularly if it's a cancer, you might want to eat cleaner. You're going to have to probably have the heating on more. You want to look after yourself.
Yeah.
There are things that you might want to do extra to try and give yourself the best chance.
Yeah. So what we're coming on to though with income protection then is that the two do work hand in hand. Income protection gives you that monthly benefit, so you can rest assured you've got your income. But the critical illness, as you mentioned, is that cash lump sum in the bank that's there to cater for family time, maybe time out of work. Also, things like medical expenses, I expect. Adaptations to your home, maybe equipment you're going to need, if it were disabilities, etc. So it can become costly when you're diagnosed. So yeah, the two, as you mentioned, they will work hand in hand, which is great to know.
And it doesn't have to be a severe critical illness, even if it's like a stage 1 cancer, which actually you would hopefully recover from far quicker. You can still claim under the policy. It's just a reduced benefit.
Yeah, brilliant.
And then the policy stays in force.
Yeah.
So although you have to have a more severe condition, the options there to claim are still quite large.
Brilliant. So we're going to leave life insurance because we've covered off 2 of the 3.
Yep.
I'm going to come on to the fact that for the last couple of years, you've been offering a complimentary will writing service.
Yep.
So I found for many years, being a mortgage advisor, that I used to fact find clients, ask them, did they have a will? The answer was no. Did they want a will? The answer was yes. But did they want to pay for a will? The answer was no. So you're offering it complimentary.
Yeah.
Can you explain why it's free for,
Absolutely.
Is it local clients? Is it UK national? What is it and why?
So for me, it is local clients. It can be nationwide. There is no, particularly these days with the likes of Zoom, there are no kind of limitations on who you can sit in front of in that respect. The service is complimentary because Fortune Financial are funding it, which is a fantastic thing. And it's partly so that if we're sitting in front of an existing client, like you say, mortgage client, protection client, we're giving them that entire service.
Yes.
So we're saying to them, we've done your mortgage, great. We've got your life insurance protected, fantastic. Well, let's finish it off and do your wills as well. So for us, that's giving that complete service. But it's also as a way of giving back to people to try and encourage more people to get their wills in place. As you said, if you go to a solicitor, oh my gosh, I think my very first will that I arranged with my husband was hundreds of pounds. And it was very complicated. Sent a very lengthy form that was a lot of information, very overwhelming. Nobody really sat down and talked through it with us. We just had to kind of do it. And that's, it's hard enough to have a conversation about what's going to happen when you die without doing it in a form. So for the one feedback I always get from clients is how easy it is.
That's good to know.
And how, I suppose, how you're kind of holding their hand and helping them through that process. And that makes a massive difference when you're talking about something that's never nice. Nobody wants to think about not being there for their children.
Yeah.
But knowing you've got that will in place is such a great thing, because at least then if the worst case scenario happens, your kids are fully protected and you've got guardians in place.
Most people, most clients especially we've dealt with, I'd expect their initial thoughts or their perception of arranging a will is that it is going to be complicated. In reality, it's simple, isn't it? It's essentially appointing roles. It's telling where you want your assets, your estate to go, which we're going to come on to. And of course, things like funeral wishes, or if you've got any gifts within your will as well. Wills aren't complex 9 out of 10 times, but if they are complex, of course, we can get the estate planners involved and ensure they've got the best advice to make sure the wishes are carried out and it is set up in the most cost-effective way by means of tax complications, but by means of tax. We're not tax advisors, are we?
No.
If it's tax advice somebody needs, we can recommend you to a tax specialist, a estate planner, even an accountant that can help you with that. But we're here to highlight the needs of concern financially, needs by means of impact. We've talked about the likes of accident, sickness, injury, critical illnesses, God forbid, passing away. And it's putting families in a position where, again, you've got that peace of mind and financial security, and you know that you can move forward knowing that if you do crash your car, you've got the right insurance to make sure you're in the right place.
Yeah, absolutely.
Okay, great. So, coming on to wills then. So why is it important for an individual, a family, business owner to arrange a will?
To have your wishes outlined. So, I mean, if you're just talking about just you by yourself, then you're specifying where you want your assets to go. You mentioned funeral preferences. You're appointing an executor. Without that will in place, your estate falls into intestate, and then an executor gets appointed for you, and that's paid for out of your estate.
Okay.
And they're then going to guess what your wishes are, and that might not follow your wishes.
Absolutely not.
Not everybody wants to leave money to their family, or everybody's situation is so different. So it's just about setting out what you want to happen.
Yeah.
If you then extend it into people who have children, it then becomes another layer in place, because then you're then saying, well, actually, if I'm not here to look after my children,
yes,
I want to tell you, the executor, who is going to look after my children for me.
Okay, so hold that thought there then, from the parent's perspective. Are we saying that the executor essentially is the main role within the will?
It's the administrative role. So yeah, they're the person that's literally sitting there looking at the will and going, right, what are Lizzie's wishes? What does Mark want to do? This is what he wants to do. Okay, great. So I'm going to now follow that process and make sure that happens.
And when you say want to do, just elaborate on that a little bit. Are we talking about the distribution of monies?
Distribution of assets, so who you want to give it to, and that's usually percentages, because obviously we don't know what's going to be in the pot at any one time, do we?
Absolutely.
So that's going to be saying, I want my money to go 50-50 to my kids, or I want it to go to my brother, my sister, whatever. It's specifying your funeral preferences, and like you say, any gifts that you want to give, and then they're doing the kind of administrative process with HMRC.
Brilliant.
Of probate.
So who's the likely person or people you would appoint as an executor and executors within your will?
From experience, it's usually going to be a family member, mum, dad, brother, sister, or family friends. It's usually going to be somebody you know rather than a professional, because they will come at a cost. Yeah,
makes sense. And of course, you want someone that's trustworthy, that's going to carry out your wishes, and I suppose it's an honourable role to be picked for, isn't it?
Yeah, it definitely is, and I think it's not as complicated as people think. There is a process you're following, and there's plenty of help online. It's just it's administrative with HMRC, so it's always a bit long-winded, but
What I would say as well is that I've come across that, if you look at let's say clients that are under the age of 40, a lot of people want to pick the parents, mother, father, to be executors for them. Would you say that's a good idea or a bad idea? And I get it's personal preference, but from a personal opinion point of view, somebody writes wills.
It's not a bad idea, because at the end of the day, your executor's got to be somebody you trust and somebody you are comfortable doing it for you. But you have to bear in mind that they are older than you, and so therefore, statistically, they're more likely to pass before you. So I guess it's can be more beneficial picking either a brother or sister or a friend, somebody who is the same age or younger than you, because at least hopefully they will be around far longer. But it's like you say, it's personal preference. If you want to pick a parent, by all means do that, but maybe have a backup.
Okay, understood.
In place, so that you've got somebody else younger to maybe pick it up just in case.
Okay, lovely. So we're coming on to guardians. For me, this is where my passion is within the protection world. It's families. Becoming a parent myself, I believe your mindset changes. Absolutely. And it's no longer about you, shall we say? It's all about your children, and you love every moment of that, and you will do anything for them. So for me, the biggest reason for any parent to arrange a will would be to appoint guardians within your will. Can you just elaborate on that and why that's important for me?
Absolutely, yeah. So if you don't have a will in place and you don't have your guardians appointed, then the scary fact is that social services would step in and they would choose who your guardian is going to be, and there is a risk that your children could end up temporarily in care while they make that decision.
And nobody wants that. No parent wants that.
No, not a chance. So they obviously have to take that role carefully and pick somebody safe. Whereas if you have a will in place and you appoint your guardians and you know that you want your brother, your sister, your friend, whoever, to look after your children, then in that unfortunate situation, your children go straight to the appointed guardian.
So what you're saying is write it down.
Absolutely.
That's what we're saying. Don't feel it will happen, because it won't. It may get to that, and it likely will, but there'll be a time period where your children potentially are not in the right hands.
Yeah. And can you imagine, as a child, losing a parent? That's bad enough. Losing a parent and then ending up, with a stranger, even for half an hour.
Yeah,
that's going to be really scary.
I suppose today's podcast we've just highlighted, and I can feel emotion as we're talking about it. If you haven't got a will and you're a parent, get in touch with Lizzie, because the need to understand that your kids will be okay by means of being cared for in the best possible way will be guaranteed. And of course, you can then have a conversation with Lizzie around life insurance, making sure they've got the financial stability. And that's something we're going to come on to in a second. Because, of course, it's not the guardian's position to then pay for that child, is it?
No, God no.
So, and most people understand that. Any parents we sit down with, they've got a real need to understand that if they're not here, their income's no longer coming into the household. And that means, potentially the children wouldn't get the future they would have wanted. So life insurance works hand in hand with arranging a will, doesn't it?
Absolutely, yeah. Like you say, if you agree to be a guardian, which, yeah, like you say, it's an honour to be that role, and if you're unfortunate enough to end up having to take on that role, because you've lost a loved one, to then have to potentially feed and look after, one, two, three more children, or however many you're taking on, that's a big responsibility.
Yeah. So we touched on 3 products before: income protection, critical illness, and I said let's park life insurance.
Yeah.
I do want to come on to life insurance now, but for the sake of the podcast, we're not going to educate people what life insurance is. People know what life insurance is. If you pass away within a certain period of time, it gives a cash lump sum, doesn't it? Nice and easy. What we do want to talk about is ensure it is set up in the correct way.
Yeah.
So can you tell me how you can do that for clients? And more importantly, what a trust is, because this word's been thrown around in our industry for a long time. Every time I've sat down with a client who's either got life insurance or not got life insurance, the latter I make sure it's written in trust, but the ones that have life insurance, it's never written in trust.
No.
So why is that a problem? What is a trust? And more importantly, just summarise life insurance for us, because we don't need to go into too much detail on that.
Yeah, so life insurance, like you said, it does what it says. It says on the tin. If you pass away before the term of the policy, it pays a lump sum to your family.
Yeah.
The trust is vitally important for many reasons, and it's not just when you've got kids. If you've got an unmarried couple, and you don't have your life insurance written into trust, and you pass away, and your estate exceeds the threshold for inheritance tax, then you're automatically losing 40% of not only your estate but your life insurance, because that forms part of your estate.
What percent was that?
40%. It's a huge amount of money.
So we're saying half of your life insurance proceeds potentially, nearly.
Yes.
I know it's slightly less.
Yeah.
Are going to Mr. Taxman, tax lady, and the other half are going to your children.
Absolutely. So if your estate exceeds the threshold and you've got a mortgage and you've taken out life insurance to protect the mortgage and it's payable on first death,
yes,
and something happens to one of you and you're not married, you are not going to get 100% of that life insurance. So you're not going to be in a position to pay off your mortgage in full, which is what you think you've done, because you're going to lose 40% of that money to the taxman.
And that's what's unknown, isn't it?
That is the bit that people don't understand, unfortunately, because I don't know why. It's something the industry as a whole doesn't talk about enough.
I know why, and it's an opinion, though it's not factual. But I'll tell you why, is that, people go and arrange life insurance through the bank, the building society, online, through one of these platforms, or, I'll be honest with you, through a mortgage advisor that, I always use the phrase, proper job, doesn't do a proper job. What I'm getting at is it's lazy.
Yeah.
Because when you arrange life insurance as a professional advisor, you will write the policy into a trust.
Absolutely.
The reason you'll do that, you just said, is that you do not want your clients to be hit with a 40% tax liability. You want it to do exactly what it says on the tin and give the proceeds that are due to the beneficiaries, whether it's the children, the partner. The tax man or lady is not paying 40% of the premiums.
No, not at all.
So the trust is essential, is what we're saying. There's other reasons we write the trust as well, isn't there? It's not just tax reasons.
No, not at all. It's also making sure that the money is payable at the right time. So particularly in the event of death, obviously the life insurance, as we've just said, forms part of your estate. And so therefore it falls into that probate pot of money. And so if you pass away without the trust, then the life insurance goes into probate, and probate is basically a red ribbon around your entire estate, and it prevents you from accessing it until it's been processed.
It's locked away.
Yeah, locked away. And essentially, again, purely down to the taxman, they want that process to be done. Once the process is done, the taxman is the first person that goes, right, I'll have some money out of that pot. And they take their share, and then whatever's left.
I'm not surprised at that. I'm not surprised.
And whatever's left in that pot is then distributed as per your chosen beneficiaries within your will. If your life insurance is written into trust, then it doesn't go into that probate pot. The trust is I suppose if you want to call it, a separate red ribbon, but it's protecting it over here.
Yeah.
Away
its own
from
little
your
bubble,
estate.
isn't it?
Absolutely. Protecting it. And then that then means that in the event of your death, your chosen beneficiaries then get 100% of your life insurance payout, which is amazing, but it also means that it's payable quickly. So there isn't this wait while we
Absolutely.
wait for probate to go through, which is
Yeah.
what, six months up to 18 months in the UK for that to be done. That's a huge amount of time to wait for life insurance to come out the other end.
Wow.
Whereas the trust will pay it immediately on processing the claim, which
So what
is
you're saying
usually
there,
weeks, not months.
you're saying it's going to be paid at the right time.
Yep.
It's going to be the right money.
Yep.
And it's going to get to the right people
Absolutely.
in the right hands, shall we say? So it's about ensuring you're dealing with an advisor. There are great advisors out there. Lizzie's a great advisor to come to, but go with an advisor that's going to do the right job for you.
Yeah.
It's a life insurance policy that has a trust wrapped around it. Essentially, that ribbon, like you say, or that ball you're going to put it in, and it ensures it does the job it's supposed to do.
Yes.
Fantastic.
And I think the one thing people don't realise is coming to somebody like myself or you or anybody else as an advisor, we don't charge fees. We're not charging customers fees to sit down and give them that professional advice.
Yeah.
We get paid by the providers, so the cost to the customer for sitting down with a professional who's got all the experience and all the knowledge and all the training is nothing.
Which, when you think about it, is fantastic.
Yeah.
It's slightly unbelievable because you go and see an accountant, he's going to charge you, she's going to charge you. Same with the solicitor, same with estate agents to sell your properties. Come and sit down with a protection specialist. They will not only tailor that bespoke advice to you and ensure you've got the right cover for your needs, but they'll write you a trust, which makes sure it does the job on the tin. Will also offer a complimentary will on the back of it, which essentially means you wrapped a barbed wire fence around your estate. You're then going to moat wrapped around it as well. So what we're saying, no one's getting in, and it's going to do exactly what you want it to do.
Yeah.
Fantastic. But it all makes sense to me. Hopefully, it does to the people listening. We're talking about protection products, and I suppose if we looked at it from a real life scenario, from a claims point of view, we know what life insurance does. Critical illness pays out when you meet that severity. Income protection pays out for really any reason of health, we're saying. So to summarize, is that them three areas, what you can do, you can sit down with a customer and you can establish whether they have a need within that area, can't you?
Yeah, absolutely.
And essentially that's what you do.
Absolutely. Yeah, the income protection will be tailored to their personal circumstance, whether they're self-employed and get no financial support from the government, whether they're employed and get 12 months pay from their employer. All of these things can be matched to the client's circumstances and fit around their existing situation.
Yeah, fantastic. So from a personal point of view, if you are employed or you're self-employed, then premiums, you can cater cover to what you can afford. That's really important to know. I just want to end with business protection.
Yeah.
So I want to talk about, I did say I'd hold that thought, and I have come back and I've remembered it as well. As a limited company director, these policies, we're talking about life insurance, critical illness cover, income protection, private medical insurance, something not spoke about today. Maybe we could elaborate on that in the future. These style of plans, you can set them up personally to protect your personal circumstance, but you can also set these kind of covers up to protect your entity, your business, and give that security.
Absolutely.
But I believe there's also a couple of policies that are the personal policies that as an individual, by being a business owner, you don't need to pay for personally.
Yeah, totally.
You can get your entity to pay for them, can't you? Can you name one of them for me? Put you on the spot.
Yeah. Well, relevant life insurance. So you're putting your life insurance for your business.
Okay.
Why pay for it out of your own personal back pocket when you can get your business to pay for it? So it'd be a business expense.
Yeah.
The business pays for it. The trust is still in place, like we said, for the personal side of things. But the trust is then paying the money to your family. So the business is paying for your cover. But the money is payable to your family.
See, I'm going to come on to that as a question. So that's a really good point.
If you're a business owner and you've got a business, why on earth are you paying for it yourself? Yeah. You can earn more money every single month if you stop paying for it personally and get the business to pay for it.
So the key is that the relevant life trust ensures that as much as the business is paying for it, that if it does pay out and a claim occurs, the trust bypasses the entity and it still passes to your wife, your husband, your partner, your children.
Yeah, absolutely. Yeah, that particular policy is going to be protecting your personal family, your situation at home, whatever that might be. It's going to be payable to your chosen people to protect. Off the back of that, you've also got the key person insurance, which is going to protect your business.
Okay.
So if you have a limited company and you only have maybe 4 or 5 staff, or which actually is a vast proportion of a lot of businesses in
Yeah,
the
yeah.
UK. You've got the staff in place, but you're probably the most important person in that business.
Yeah.
If you go down, the business goes down.
I'd expect that with 9 out of 10 business owners
Yeah,
for
I think
sure.
that's probably
Yeah.
the case. And actually, if something happens to you, and it doesn't have to be something as severe as death, if it's something like a critical illness and you're not able to turn up to work every day, then you're going to lose your business.
Yeah.
And then you've had a really horrible position of having a cancer that you've then had to deal with, and then when you've then hopefully recovered from that cancer, have you even got a business to go back to?
Absolutely, yeah.
Or are you now left in a position where you've either got to start again, or you're now unemployed?
They say money is the root of all evil, don't they?
Yeah.
But the answer to what you're saying is that in the event of that scenario, you're going to need cash.
Absolutely. So having the key person insurance is essentially your life insurance, but instead of protecting your family, it's protecting your business.
Yes.
And that money then gets payable back into the business to allow you to essentially replace yourself.
Give you breathing space.
Yeah, so you can then employ somebody who, it's obviously not going to be you, but you could employ somebody to then keep that business running.
Yep.
So that when you are well enough to return to work, you've got a business to come back to.
And that also comes at a cost, doesn't it? Finding the right people to come in and replace you. One, you want someone who is a high level because they need to take on maybe a CEO role, director role. So that's going to cost you, and it's not going to cost you hundreds of pounds. It's going to cost you thousands of pounds. So where's that money come from? A lot of businesses and entities don't have that disposable income. So the key person will provide cash flow to be able to cater for that need. And as you mentioned, to pay the salary for the individual to be able to, man the business, take operations while you focus on your health and get yourself back to full fitness and back into that business so the business doesn't suffer.
Yeah, absolutely.
Brilliant product. There's one last one I want you to discuss today with me, and that is executive income protection. We've talked about income protection from a personal point of view, and executive income protection for me is the hidden gem within the financial services world. Can you just elaborate on executive income protection for me?
Yeah, so that's going to be, excuse me, very similar to
have a drink,
insurance.
Don't worry. There's no pressure on here.
Very similar to life insurance in that you can get the business to pay for it, but instead of paying out a lump sum in the event of your death, it's going to pay out a replacement income. So very similar to the income protection we were talking about personally.
Yes.
It's paying you an income out of your business. So in that scenario where you're off work with a cancer, you have the key person insurance in place, which obviously replaces you to enable the business to carry on functioning. But you're now sitting at home without an income.
You still need to be paid.
You still need to take something out of the business, and you can't do that if you're having to pay, for the business to continue. So the income protection then allows you to draw your salary out of the business. The key person works alongside that to replace you, so that then when you are well enough to return to work, you've got that, firstly that business to come back to, but also you've been able to pay your bills in the meantime.
Essential.
Yeah.
And I suppose that then prevents you having to take a personal income protection policy, which will come out of your PAYE, your dividends that you're paying yourself. The business and entity, just like the relevant life cover, the business and entity can actually incur the costs, whereas you benefit from protecting your income.
Yes, yeah, exactly the same. Your business pays for it, but you get it in your back pocket.
Yeah.
In the event of you needing to claim on it.
It's an absolute no-brainer. So with executive income protection, I just want to add, it is going to protect your PAYE, your salary. It can protect dividends. It can protect pension contributions, national insurance contributions, up to about 80% of that full remuneration of your income, can't it?
Yeah, absolutely.
So what it does, it guarantees that you can have breathing space, I suppose is what we're saying.
Yeah.
So for me, any business owner out there that currently doesn't have security for the business and individually, I think coming speaking to you for free, as we've talked about, that might be the saying of the podcast today, for free, because it is, it's complimentary service. And again, we get paid from providers. It comes down to, I suppose, why would you not? If you're an individual, if you're a family, if you're a business owner, reach out to Lizzie and you will offer, fantastic advice.
Thank you.
One thing we always do at the end of the podcast is we make a charity donation as a thank you to Lizzie for coming on. So we'll make a charity donation this week. Have you got a known charity you'd like to name today? If not, don't worry, you can always update me after the podcast. But anyone that comes to mind, any charity?
Yeah, so I'm actually going to say a charity that probably you've not heard of, which is Sarcoidosis UK.
Fantastic.
It's unfortunately a very nasty autoimmune disease that affects people. Charity does not get enough funding, so yeah, it would be amazing to put some money into that.
Brilliant. And thank you so much for your time today. We'll make that donation
okay,
for you.
thank
We'd
you.
love to have you on again.
Yeah,
And we'll go into a little bit more depth around what's it, business protection is one that made me sit up today.
Yeah.
And you know, an add-on, you know, if people do want to know about that quicker rather than the next podcast coming out, how do they contact you, Lizzie? And of course, I'll be putting your details in the post anyway.
Absolutely, yeah. So phone, Facebook, WhatsApp, however, just get a hold of me one way or the other, and I will more than happily sit down with anybody and go through all of the above.
And you did touch on it before. You can do face-to-face.
Yep.
Zoom video appointment.
Yep.
Telephone.
Yep.
So by means of restrictions, really isn't any. We can cater for clients' needs.
And I think a lot of people these days, you know, the Zoom is so useful because it means you don't have to take such a big chunk of your day.
Absolutely.
You just pause, get it done, and carry on.
There you go. I think that's a great place to start. So thank you very much for coming on. Been a pleasure.
Thank
Anyone
you.
watching, listening, whether it's Spotify, Amazon Music, YouTube, please subscribe, follow, like, and definitely comment in the comments. Let us know your feedback on this. And if you have any questions for Lizzie or myself, please put them there and we'll get them answered for you. And we'll look forward to seeing you in the next episode. Thank you.